Hello, gents. So hopefully you took note of the explanation of chapter or question 17 in the class notes, and you're coping quite well with everything. Just taking my time, so just enjoying looking at that photo. Such fond memories. God, I can't wait to get back to the golf course. Right, let's have a look at a couple of exercises, 10.1, 10.2. I'm not going to go through the entire activity with you, but we'll just highlight a couple of points. So when you're given these ledgers, obviously the inventory ledger we don't have to do anything with because it's a balance sheet, current asset, going concern, carry forward to future reporting periods. It does not get closed. The sales account, on the other hand, will. So we currently have 62,000 in that account on the credit side, which means that we will put in the words profit and loss summary on the debit side for $62,000, and that account will now be finished with. The same as sales returns. You write profit and loss summary on the right hand side, interest revenue, profit and loss summary on the left hand side. Cost of sales will be profit and loss summary on the right hand side. Wages, profit and loss summary. Rent expense, profit and loss summary. Advertising, profit and loss summary. And inventory loss, profit and loss summary. Alright, so that's the journal entry. I'll show you that in a second. So explain the purpose of closing the ledger. So hopefully that's starting to resonate with you. Two reasons. One, calculate profit. Two, reset all the revenue and expense accounts back to zero in readiness for the next reporting period. Right, so we go ahead and record those closing entries, and it should look like this. So your revenue accounts, the three revenue accounts plus the sales returns, is closed off to the profit and loss summary, so that gets the credit. Your expense accounts, as listed, get credited, and the total of those gets debited to the profit and loss. The difference between those two figures there, that is your revenues, or your net revenues, less sales returns, minus your expenses, gives you the profit or loss for the period. Not much of a profit for this little company. So a profit of $950, which then gets transferred to the capital ledger. Right, that's your increase in owner's equity for the period. All pretty straightforward. So why is inventory account balanced? So you would have all gone going concern assumption that current assets and asset accounts, liability accounts carry forward to future reporting periods. We assume the business has an indefinite life. How will the profit and loss summary account be reported in the balance sheet? Yes, hopefully you all identify that. It will be reported under owner's equity. So it'll be capital, whatever the capital balance is. You then add your profit and loss summary if you've made a profit, or less profit and loss summary if you made a loss, less loss for the period. So in terms of what that looks like here, oh, I forgot about all the ledgers, didn't I? Let's go through those ledgers accounts. So sales, profit and loss summary, always on the left-hand side for revenue accounts. Negative revenue, so it goes on the right. And for all expense accounts, it will go on the credit side. Revenues, it appears on the left-hand side. That'll be the same for the rest of the year. Expense accounts, profit and loss summary, always on the right. All right, so start getting into that habit. Expenses, profit and loss summary, always on the right-hand side. Always. Same thing, over and over again. All right, then you do the profit and loss summary account. So all the revenues now get bunched together on the credit side. All the expenses get bunched together on the debit side. And the figure which makes both sides equal is transferred to capital. If it's on this side, it means the capital account is going to get a credit, so therefore it's a profit. If it happened to be in here, it would mean that the capital account is going to get a debit, which would be a loss. In the capital ledger, you write profit and loss summary, if indeed we've made a profit. Gone through the theory. The profit and loss summary account is transferred to the capital account. That was the one. I thought they might have given you a balance sheet, but it goes to the owner's equity section in the balance sheet. All right, so that's 10.1. sure that wasn't too many problems for you. 10.2 is very similar. Notice one where you've got debits and credits in an expense account with cost of sales. And if I asked you all to explain what that entry there is for $500, I know you're all going to yell at me and say, yes, I know what that is. That is a sales return at cost price. This is you charging out at cost price. This one over here is a sales return at cost price. So you add up the debit, subtract the credit, and the net amount is what is the expense and transferred to profit and loss summary. So very similar to 10.1. So let's have a look at 10.3, which I'll leave you to do. And if you look ahead, they're all very similar. So 10.3, 10.4, 10.5, they're all just trial balances, income statements, answering a few theory questions, again, closing, doing income statements, balance sheet, classified balance sheet there. So nothing new at this stage. 10.7, still doing the same thing. An ethics question in there, but still closing, income statements, balance sheets, ledgers. Once we get to 10.8, I'll kick back in again. All right, so all the way up to 10.7. So Monday, Tuesday, Wednesday, Thursday, I think would be reasonable to work all the way through up to including 10.7. So just getting you started again. So 10.3, you go down the debit column, identify those items that are expenses, watch for sales returns, because that needs to be deducted from the revenue journal. Go down the credit column and look for those items which are revenues. Right, and then you do the closing off of revenues, closing off expenses, transfer the net result to capital. If there's drawings, you close that off to the capital account. So make sure that you know the double entry for that. So it's a credit to drawings, credit to capital. All right, and any associated theory questions, answer those as well in your workbooks. All right, so any problems, just pop in during Google Meet, but I think most of you should be very comfortable chugging away from 10.3 all the way through to 10.7.